Why does it seem like every time the world is in crisis, the wealthy come out richer, while the rest of us are left scrambling to recover? It's not luck, it's not magic. It's a quiet transfer of wealth, and it happens over and over again. Today we're going to explore what that means, why it keeps happening, and most importantly, what regular people can do about it. A wealth transfer isn't a conspiracy. It's not about shady backroom deals or secret societies hoarding gold. It's about how money moves in times of stress and who's prepared to catch it. Here's what typically happens during a financial crisis. People panic. Prices drop. Stocks, real estate, even entire businesses. Those with limited resources are forced to sell their investments, their homes, sometimes their peace of mind. And during that chaos, the wealthy, those with liquidity, access to credit, and a long-term mindset, buy. It's a basic principle. Money doesn't disappear in a crisis. It just moves, and most of the time, it moves upward. Let's look at the receipts. History gives us clear examples. The Great Depression, 1930s. As banks failed and unemployment soared, a small group of investors, like John Templeton and Benjamin Graham, snapped up assets for pennies on the dollar. When the recovery came, they became millionaires. The 2008 housing crash, home prices collapsed. Foreclosures skyrocketed. While families lost homes, private equity firms like Blackstone and billionaires like Warren Buffett bought thousands of homes, turning crisis into long-term rentals and profit. Buffett also invested in Goldman Sachs and Bank of America at their lowest points. He made billions when the market rebounded. COVID-19 2020, the world shut down. The market crashed, but within weeks the wealthy were buying. Jeff Bezos, Elon Musk, and others doubled their net worths over the next 12 months, while many everyday people drained their savings just to survive. This pattern repeats. Every time there's a downturn, the rich play offense. The rest play defense or don't even get to play at all. So why does this keep happening? Because most people don't have what it takes to survive a financial shock, let alone take advantage of it. Here's what that looks like in real life. No emergency fund when disaster strikes. Many people live paycheck to paycheck. Without cash, they're forced to liquidate assets, often at the worst possible time. Limited access to capital. Even if you wanted to invest during a downturn, banks don't lend easily when the market's panicking. The wealthy have standing credit lines, most don't. Fear and scarcity mindset. Fear is powerful. The media amplifies it. And when fear spikes, people make emotional decisions, selling at the bottom, hoarding cash, retreating from risk. Short-term survival, long-term strategy. You can't think long-term when you're just trying to make rent. And that's the trap. Crises force people into survival mode while the wealthy stay strategic. It's not just personal finance, it's systemic. Tax codes, capital gains are taxed less than income. That means the rich pay a lower effective tax rate than many working-class families. Corporate bailouts. When small businesses fail, they close. When large institutions fail, they get rescued, often with taxpayer money. Financial literacy gaps. Wealthy families teach their children how to invest, how to build credit, how to use debt strategically. Most schools teach almost none of that. Institutional knowledge. The rich know how the game is played. They hire advisors, they understand risk. They get early access to deals most people will never see. It's not a fair playing field, but it is a pattern. And if you recognize it, you can start playing smarter. You might not be able to buy millions in real estate or stocks during the next crash, but you can adopt the same principles. Here's what that looks like for real people. Build a cash buffer. Before you invest, before you take big risks, build a safety net. Even $1,000 in emergency cash can prevent panic selling. Understand opportunity, start watching the markets. Learn what a discount looks like. When fear spikes, opportunities increase. Preparation lets you act. Diversify your income. Don't rely on one paycheck. Whether it's freelance work, digital products, or dividend stocks, multiple income streams build resilience. Educate yourself. Financial literacy is your best armor. Learn about investing, debt, credit, and taxes. Knowledge turns fear into strategy. Think long-term, don't panic in a crisis. Pause, observe. Wealth isn't built in the peaks. It's built in the valleys. The next crash will come, that's not fear, it's history. But when it does, the question won't be if money moves. It'll be, will you be in position to catch it? Thanks for watching The Quiet Source.